Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, June 30th, 5:17 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Big Show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at important levels for next week, and update the world famous 21 over 21 leaders list. Let's get right into it. State of the market. We are in an uptrend. You can see over here on the trend gauge, since June 9th, we've been flashing. Really, we started before with market leaders in short term. And then in the first week of June, added medium, 6-9 added long term. Great month of June for stocks, great month of June for leaders, great month of June for our flagship portfolio, up almost 7%. And capping it off with a great day on the close. So market leaders, as you can see, uptrend. The only concern continues to be, and it's not a concern if you're in these stocks, the NASDAQ 100 led by the big seven stocks continues to be extended by historical measurements from its 50-day moving average back up over 8% from that level today. Has moderated a bit from the standpoint that the S&P 500 made new closing highs and intraday highs today on the rally, while the NASDAQ 100 didn't. That kind of syncs with what I said last night about very mild lack of relative strength versus the S&P 500 over the last week and a half, as we've broadened out from tech into other sectors, specifically industrials, basic materials, and also into mid caps and small caps to broaden the strength of the rally. That's undeniable right now. So what happened today before the open? PCE inflation data, watched very closely by the Fed, came in either cool, meaning below expectations, or in line with expectations. That sparked a nice gap up. That gap up put in the lows for the day immediately after the open. We rallied most of the day before a little bit of a give back into the close. Anybody that was bearish today ended up getting their bear for burnt, singed, whatever you want to call it. You can't deny what the market is telling you with its price, volume, and relative strength action. Here are the numbers on the day. RG8, this is our ADTF growth composite, up 0.92. S&P 500 gapped up 0.7, got as high as about 1.35, settled at plus 1.23. All 11 sectors positive. Great stuff for the S&P. NASDAQ 100 gapped up 1%, was up maybe 1.8%, closed up 1.54. Dow gapped up 0.55, ended up plus 0.84. Mid caps up 0.65. Russell 2000, mild disappointment, gapped up 0.9. Faded, regained its strength, and then faded late in the afternoon, but still finished positive at 0.38%. This fade corresponded with banks giving back some of their recent gains. Global 60/40 stock and bond up 0.76%, led mostly by stocks, but bonds were up also as interest rates eased a little bit despite the strong inflation data, leading to the market pricing into additional raises, interest rate raises by the Fed going into the end of the year, including an over 80% on the next meeting, which is in July. In-house GROTECTION up over 2% at one point. Leaders faded a little bit, still finished up 1.54%. We're quite happy with that. We'll hit the tail of the tape and the updated 21 over 21 list. Let's get right into it. Here's the S&P 500. You can see this very nice gap. As I mentioned in Tuesday's video, we got an inflection point, and that's a level to trade against. The third significant one this year. The first one was 329 with the IBD follow-through day, got us back above the 50-day moving average. Haven't broken it since then. The second one, actually, there's been four of them. The second one was the NVIDIA 525. It doesn't show as much on here. It does on the NASDAQ. The NVIDIA 525, huge earnings beat that led to money rushing into tech-related AI stocks. The next one, just a bit later after that on 6.2, the gap. and we hold it above this little bit of congestion right here. And then the lows from the pullback on 626, great close to the week. Gotta like what you're looking at here if you're long, and we are very long. All five of the indexes putting in a bullish hookup on the daily stochastic also. Let's go to the NASDAQ 100. Gapped up, held the gap, closed near the high of the range, 370, a little bit of resistance, which were the highs from 2 weeks ago before the pullback. Great stuff here. Stochastic crossover also. This was the lone holdout yesterday, as I mentioned in the video. Holding out no more. Here's the Dow Jones Industrial Average up 0.84%. You can see the gap. Resistance is now the highs from 2 weeks ago. Mid caps, MDY. Breaking out of the cup and handle. How about that? So making higher highs along with the S&P 500, showing some nice relative strength this week. This is just a really nice setup on mid caps, and we talk about mid caps more than just about anybody else does. Never hear them discussed in the media, but this is the breeding ground for the next generation of leaders before they make it into the S&P 500. So we're always fishing in the mid-cap waters. Small caps, IWM, not quite a breakout yet, above the high of the handle, but looking good nonetheless. Nonetheless, five up days this week. How'd we close for the week? Up 3.71%. Good stuff there on the small caps. Let's go now to, we'll start with the dollar, UUP, down a bit after yesterday's gap up, which ran into the declining 200-day moving average. If dollar was down, would you expect gold stocks to be up? Well, they were. Here's GLD, first of all, up 0.67 into the declining ADMA. This is a morning star pattern. It developed with one more candle than normal, but after a long decline, you get what looks like a washout to the bottom, and then some strength comes in, and then a second candle, or in this case, bar, confirming that strength into the ADMA. Now, the gold needs to get above the declining 21 EMA. Note the crossover on the stochastic from deep oversold. These stocks have been ignored for quite a while, like 6, 7, 8 weeks, as you can see on the chart here. Maybe time for some money to flow back into them. We're keeping an eye on that sector. Same thing with GDX. Looks a little bit stronger, closed above the ADMA. Undercut and reclaim of the 200-day moving average, stochastic cross, everything looking good there. Silver SLV, a little bit weaker, barely having the stochastic cross, sitting on the 200-day moving average. Let's go to the VIX. Higher highs on the index, lower closing lows, but this 1359, is that, that's not what I'm showing. Hold on a second. Yes, 1359, slightly up on the day on the VIX. This spiked a little bit into the close. Yes, it did spike into the close. The last reading that I had was that it was down on the day, but it's not down on the day. Where are we now? We didn't do Bitcoin. Let's do this. So Bitcoin started out very strong on the day. Look at this chart. And then the SEC said, hey, you spot Bitcoin people, your submission was inadequate, and it dumped big time, recovered a lot of it by the end of the day, but still down 1.22%. And this goes for those stocks that trade in line with Bitcoin too. But then I read something, and this may have sparked the resurgence during the day, that it was a simple procedural information that wasn't provided, and if they provide, and a bunch of, uh, as I've mentioned recently, this is about when it came out, right around noon. A bunch of the big dogs in the investment area have filed these Bitcoin um, spot Bitcoin ETFs, and it may just be a formality that they need to clean up their application a little bit. But anyway, that's what happened with Bitcoin today. Now on to bonds. We'll start with BND, the broad bond index up, which means prices eased a little bit. Remember the gap down yesterday on the strong economic data, right into the declining 200-day moving average. We're still in this range on bond prices and yields. Let's go to TLT. TLT up more on the day into the declining moving averages, up 1.18%. That means the TYX 30-year up quite a bit, or down quite a bit. I mean, yes, down 1.5% on the yield, basically retracing at least over half of the move yesterday. Let's go to the TNX. 10-year down 0.91%. Now let's hit the tail of the tape. I do have to clean this up. VIX 1359 was actually positive by 0.37 or zero point 0.4 since we're rounding to tenths. Below the 21 EMA, that's what's important there. Stochastic, the index is green, RG8 green, NASI RSI hooked back up, green, dollar neutral, bonds in range. Here's the news about the PCE inflation data, and I did talk the odds 87% last time I updated this morning. 3 out of 4 days in this 20-day rally since that gap up, and fourth day above the 8 EMA, 25th day above the 21 EMA. Only fly in the ointment, again, the NASDAQ being extended from the 50-day moving average. It's coming back begrudgingly versus the S&P, but it did get under 7 now, closing at 8.3. Actually, it got to 6. Clearing resistance on both the S&P and the NASDAQ. Good stuff there. 11 out of 11 sectors up, including semiconductors. On the downside, Bitcoin, regional banks, and the big banks, KBE also. Transports, by the end of the day, they turned positive, and so did retail. These were lagging early, but so that's it. Banks, let me double check that. Yep, KRE, KBE, the only of my 2 ETFs on a string of 60 that were down on the day that I tracked. So what do we do in-house? We added to chat. We came in pretty heavy into the market, only about 4% spare cash to buy stuff and still maintain what we like to keep aside for hedging and our bond, short-term bond allocation. We added a percent to chat. We bought DRV, Inverse Real Estate ETF. I'll show you why, but then we're down on this immediately. So uh, there was a big squeeze into the close on real estate. I was watching this. I had a limit order in under the market based on the stochastic, expecting a pullback. Got the pullback. We got our entry, and then a big burst to the upside into the close. Before that happened, it was looking like another failure at the 200-day moving average. So our stop will be above this 3806 level for a small loss if that's what happens. We're down about 2% on it. So that was the only other portfolio change that we made, slight decrease in the beta because of that hedge. But the bottom line for the day, the week, the month, and the quarter, PCE inflation data gap up, sparked a broad rally, S&P 500 new recovery high. It is what it is. You don't argue with it. If you're a bear, you can, but I will just point to the scoreboard. So let's move on now to the world famous 21 over 21 leaders list. First, let's talk about what got taken off. So this might surprise you, but if I have one or two or three or four of the big 7, I might as well have them on here. The weakest one is Google. It's not above the 21. We got stopped on it this week, and that's why it's off the list. But we also did offensive selling on our Microsoft. Actually, not offensive. When it broke below the 21 is when we sold it. It rebounded back above the 21. But note the relative strength lagging on this, and the relative strength didn't pick up on this recovery from the S&P 500. Now, this had a great run. It's a mega cap stock. It's involved in AI, all that stuff. We've talked about how we're going to play chat to play these. I like the way chat is configured. It's got all these big stocks that we want to be involved in for AI at the top with heavy weights. And instead of taking up a portfolio position, another one we have to monitor when we think we can do better, either in SSO at this point after we book the gains, or with QLD if we need to, or with chat. So Microsoft off the list. If we don't own it, we're not going to include it in any of these big 7. If we don't own them, they're not going to be in the list. Tesla and Nvidia still are in the list because we own them. We also sold Meta. Just offensive selling on this, a little bit of lag in relative strength this week. It's great. It looks fine. There's nothing wrong with it. Stochastic rolling over, minor weakness. But the run and the big gain for these maybe moderates with the NASDAQ 100 being extended. So that's how we took some of that risk off of the table. So let's go to what replaced them. Okay, so those three off, the three replacements at the top. The first one, Generac. Uh, this doesn't, I'm going to take stochastics off so the chart shows a little bit better. Generac had just a terrible, had a great run and then 80% loss. You know, William O'Neill says that the average leader when it tops loses 72% after that. Well, here's a poster child for that. But sometimes these poster children come back and there is money absolutely flowing into Generac. You can see by these big weekly bar spikes, it broke out, it's extended. We want to pull back on it, but industrials are working. It's a cut base, never really handled. We want the handle now before we enter it as it is extended from its shorter term moving averages, but this is really looking good and we know how it can run. And here's the decrease in sales from 2022 to 2023, but next year back up 33% gives it a PEG ratio under 1. We like that. Next one, semiconductor index. Back in this, we're in SOXL with the bounce off of the 21 EMA. No better way to play tech than with semiconductors. I do see what I'm looking for now in this is that the relative, and we're playing it through SOXL, but we always have the underlying, as SOXL is a 3-time derivative. We always have the underlying is what we track price by. You see the gap up, the gap stayed. We're mindful watching relative strength. Will it keep up with what it did when it made the prior price highs? Right now, it's lagging this point, but this was the second day of the big gap up after NVIDIA. So we're lagging on a relative strength standpoint there. We just want to see if the gains, and because they're triple, I would easily expect it to beat twice the S&P 500, but we'll be monitoring that. So we're in SOXL, added SOX there to represent it. And there are 10, 12 semiconductors that easily could be in this list. So, but we still own NVIDIA, and SOXL is the way we're playing that group. SMCI bought this week with the move off of the 21. Very clear leadership, fantastic relative strength, bounced where it needed to, showing strength off of there. So those were the 3 ads for this week. The remaining 18 were on from last week. So really, bottom line, by the end of the week, only Google from last week's list broke below the 21. We took Meta and Microsoft off because we sold them. We will track the big 7 here constantly, so you won't have to worry about that. And those are probably some of the most common charts viewed anywhere. Weatherford, standout oil stock. Oils have a comeback. I would expect this to lead. They had a good week. Weatherford near the top of this, what was actually an attempted breakout that failed, now taking another run at it. Note the volume down here. Okay, Weatherford, next up, play. This is Dave & Buster's bounce off the ADMA after some a good earnings report and then follow up on their metrics that they're expecting to hit. MongoDB, we bought this week, broke above the 400 level, back tested it, held it, followed through to the upside, new closing recovery highs after the big earnings gap up. Definitely under accumulation, relative strength confirming. Caterpillar had a great week, 5 up days off the 21. Unity Software lagged the last 2 days, but this was a pretty big day, up 15%. So back to the top of this cup. Here was the handle. The handle happened after a move up and failure. Note the lower volume in the handle, volume coming back in off the 21 EMA. We're watching this. Their partnership with Apple and their 3D software is pretty impressive. Palo Alto, absolutely the leading cyber stock. One of the big mistakes we had was not finding a way into this during this run. Here's Chat, under 1 day below the 21, back above it, back above the ADMA 2. Toll Brothers continues to ride the ADMA higher, confounding all of the people that swore housing would fall apart. Tesla, supposed to report deliveries over the weekend. Bounced off the 21, regaining the 8. Live Nation, higher highs after we bought it. Gotta love that. Dynatrace lagging big time on a relative strength basis. We had a big discussion in-house about whether we should punt this one or keep it from the portfolio, and we're going to keep it for now. It's set up. The setup is there for it to go higher. Look how the volume came in 2 days ago, pulled back on lighter volume, higher volume today. The setup is there, but it needs to show. It needs to show us something. It's actually lagging the S&P since we bought it, so it needs to show something. Elf continues to just be a beast. The beauty and the beast. The beauty is a beast. How about that? Celsius continues to show strength, riding the ADMA, having a little trouble around this 150 area. Uber trimmed some yesterday, bounced today on lighter volume. We're keeping a close eye on this. Intuitive Surgical, man, 5 nice days up there. DraftKings, great week, new highs. Ferrari, I read that there's a 2.5 wait if you want to buy a Ferrari. Maybe these 4 up days, including what looks like 4 gaps and volume coming in. Man, now relative strength confirming the price. Looking good, Ferrari. NVIDIA, of course, the market leader, consolidated triple inside day, and then a gap up, held the gap back above the ADMA. Looks like it wants to go higher, and that's it. That's your 21 over 21 list, and that will wrap up this week's big show. As always, I'd like to hear from you. Email me or my partner Dan Stewart, Don or Dan at revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. We posted the podcast to YouTube. If you're on the email list, you'll get notified about it with a link tomorrow. If you want to go to YouTube now, it's already out there. Great segments from the fellas. Really strong team that we all have here. So proud and happy to be working with everybody that we've assembled here at Revere. Get great contributions constantly from the fellas. Really glad to have Connor and Ted here in St. Augustine working full time with me, learning the business, and just working as a team. Really, really glad to see it. And with that, I am going to wrap up today's, this time I mean it. Remember, it's not how much you make in the market, it's how much of that you can keep. June was a testament to what can happen when you're in the leading stocks in an uptrend. Great reactions by the indexes where they needed to, and great action by leading stocks. And with that, I'll wrap up the day, week, month, and quarter ending June 30th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great weekend.